Hello traders, Nick Shaheen here looking at energy. So I have a very simple thesis on energy and it hasn't failed me yet, and I usually trade it via the USO. Hard to trade ETF because if you don't buy at the money, you get roped into chasing these cheap options, and you guess the right direction, but then you don't get the magnitude to profit. But the thesis works every time, and it's almost like inverse to what everybody else believes. But it's not really. But it just goes hand in hand with my own personal opinion. So here's what I say. Usually people say that OPEC does not matter. I disagree. OPEC still matters, and it's in their best interest to have oil be between 52 and 60. So anytime it goes above 60, this is light sweet crude we're looking at, everybody starts calling 75 and 80 and even 100. And it doesn't work out that way, because as soon as it hits those levels, all of the Western pumpers, depending on the methods they extract, they're usually more expensive than OPEC, which only cost them under $10 to pump. And they start producing. So you have all this excitement about it, and then you get a downpour of supply, and the price gets stalled. And then you start hearing the rhetoric from OPEC, whether they're cheating, not cheating, and all that. Regardless, anytime everybody's excited about it, if you watch CNBC, if everybody's bullish oil, time to go short, or at least time to not chase. So last week they had, or a couple of weeks ago, I don't know when, Options Action, decent show. They keep it simple. They had a chase oil trade, but they used the XLE. So, and I think they bought a call or a call spread or a call calendar spread. I'm not sure, vertical or calendar, out in April. And clearly it didn't go their way because they bought somewhere up here, and now oil is down here. I shorted oil at that with the 13 call on the USO, and it won. It went in the money a little bit, but I stuck to my guns because I had a particular value. I think it was like 13.18 or 13.22 or something like that, because that was the last fail. I bet you it coincides with these two peaks right here, or this one. So here's back to this center. The action was this XLE trade. So I would caution against chasing that opinion. So here's the way I think about it. Very simple. So this is a daily 1 year. Every candle is 1 day for about a year's worth of data. So I'm going to show you the lines I have on there. And I don't delete the lines for oil. This green line comes from somewhere, and I want to know where. Clearly it comes from older period of time, because I don't see the reason why I would drew it here. But look how it coincided right there, okay? So I literally cannot remember when I drew this line, so I'm going to go to a weekly. So this is 5 years worth of data, and the line extends. I will tell you, however, that right here in that circle, at that time in 2017, I drew the circle because I thought that XLE was exiting this descending channel. And I said, something's going to happen here, and this happened, and then that happened, and then this happened. So it was a violent place because of that green line as well. And it was a confluence of two things: a level for the green, and then a descending channel breakout. All this to say that this point in time, this level where my cursor is right here, which is 64-ish, mattered in 2017, mattered in 2018, mattered right here in 2018 late, and it still matters. Look how poignant it is. Right there in September was exactly the fail point. And this was no coincidence, because this was a contention level in 2016. And I bet you I can go out further. I'm going to go to a monthly chart. So this is back to 2001. And okay, so I can tell you I stopped doing these letters on the lines years and years ago. So this line is years old. And look how important it still is. What does that mean? It means this whole zone around this line is sticky. So this is I'm going to zoom in a little bit to capture from this period of time on. So that would be the extension of this big rally from wherever the heck that is, 2004. So now the volume profile means something. So from this point on, the whole battle, this orange line is the point of control. This is where most of the buying and selling happened. That's a mathematical value that takes all these volumes. This shows them where they happen in time. This shows them where they happen at what price. So that's also resistance on the way up, support on the way down. So I'm going to keep zooming in to see if I get any more information from that. I don't. So back to the daily, to present day, and reset. So now we're looking at a year's worth of data. Anytime price approaches the zone, I have to admit to myself that it's resistance. Okay, it looks attractive, that it looks like a neckline from which they can break out. Fine, I buy that, but it's up to the bulls to take it out. So where would I short? It depends on my time frame. If I wanted to short, by the way, nothing here is a trade alert, by the way. This is sharing how my thought process versus a chart versus what I hear on TV and people chase. So before I chase an idea of buying the XLE up here, I should look, has it been a failure before, and when? So why not wait until they take it out and then chase? You know, buy high, sell higher, not buy low and hope it goes. So it had been a big crash. Yeah, it's a crash at 62. So that's 10%. Back at it. Okay, they got above it on a gap up here, whatever the hell happened here. But it failed. That's another failure point. So another dip of 9%. Back at it, another dip of 6%. It's good. Higher low, that's good. Another failure, again, higher low, that's good. So why not wait for these higher lows to accumulate, and then they keep bumping against this neckline, and then they break through it, if they break through it. If not, they fail again, like here. That was a series of higher lows a little bit. So this is the slower trader. What if I'm a faster trader? So I would go to a lower time frame, to a 2-hour time frame. I can tell you here, if it gets to 60.5-ish, 60.4, it should be sold until they take that out at this level. And I'm looking left now, and I hadn't seen this before I said that on the right. And where is that? 60.34. Once, twice. I didn't look left until I said the 60.4, just from what I'm looking at, the right-hand side of the chart. Clearly, this is a contention level. So, but the good news is that they're also solidifying some support. So like I said, the attacks to the neckline are happening with some support that is higher and higher. So now the energy is building. So if you were to draw a line, where's my line? Oh, these guys. So you get lower highs, and then you can argue that it's going on higher lows. It's going to come to a point, and they're going to do this or that. Then you attack it from there. And I don't decide which way they're going to go. I just chase whichever way they go. So if they go up, I'll buy the USO. I don't have anything against it. I don't love to short it. I just don't love to chase something that's not there. So this is a half-hour chart. So here you can find even more shorter term trades, like 59.6 versus 60.2. So if I'm even faster than this intraday, I don't know if anybody has time to trade 5-minute charts, but here they are. Usually futures traders trade 5 and less, 30-second charts. But I can tell you that all of these are fails. So onus is on the bulls to take out 60.2, for example. So I don't have time to watch the chart minute to minute. I'll do this. Tell me when it's above here. Tell me when it's below here. And then I can change charts and go. So I'll go to USO. Definitely don't trade that this fast. So this is the point of how I take information I hear or read or see, or somebody gives me a quote tip, and before I just jump in with both feet, I have to give myself the chance to put my own spin on things. So why just chase blindly? Here's an example. This is the USO daily. So at this point in time back there in May of 2019, I knew that there was a position, a period of time where there was a tight, consolidation zone. I didn't know which way it was going to go. I was ready to chase this or chase that. So once this happens, same here, chase this or chase that. So here, some inverse head and shoulders. So it's easy to see levels where it's a let's put it this way. I'm not chasing the perfect entry point. I just want to avoid the mistake. So up here, was it a good time to buy? I knew it wasn't. If I hadn't seen this chart before and somebody said, regardless of what the ticker is, if somebody asked me right here on that day, on September 16th, is this a place to buy the USO? No. That's an accident scene from in May. Yes, it's great they got back at it. First of all, with a huge gap. I wonder what happened that day. Anyway, and was that the bombing day? Maybe it was the drone day. I'm not sure. That's another thing. Okay, so I'll tell you in a second. So we had a drone attack. Took out the biggest supply of oil, I think, on the planet in one spot. And this is all they could do. So once they fall from it, that becomes the world ended and this is the best we could do type of a deal. So we got back to it. You want to buy it again? The world ended again by actual rockets. By the world ended, I mean, like put it in quotes, like it's a disaster. What? The only thing worse than this is actual full-blown war. And I want to buy it again? It just failed. It just failed. I tell you what, the third one might not fail, and then the rally would be huge. But onus is the buyers, the bulls, take it out before I chase it. So is this a good time to buy it? It's not, in my opinion. It's a good time to put up, in fact, I'll do it right now, an alert to start watching it. Because if it does, I'll probably name the alert and I'll say 1450 question mark, just so it reminds me what I'm looking at. I eyeballed it. Okay, that's enough information. But this, by the way, applies to any chart. It doesn't have to be the USO. The SPY is busy. So, yeah, that's a longer conversation. Anyway, in the SPY today and yesterday, today is the 10th, by the way. Yesterday was the 9th. Yesterday, you could have thrown a class about levels and volumes just in one day worth of charting in the SPY. It was all centered around 326.2 or 0.15 even. And it was a clear level, and it was just a perfect lesson for somebody that wanted to learn levels. Speaking of learning, down below there should be a link if you're interested. Plain simple English. I'm not a Wall Street guy. I'm an engineer that taught myself. So we can discuss this in plain simple English. Just click the links below.